Hey, this is Justin with DayTradeTheMarkets.com on May 27th, and I wanted to look at the gold market today, but wanted to do that to talk about what we call the breakout trade or the pure breakout trade, and talk about what makes up a really good high probability breakout scenario. I know a lot of people. I mean, if you can hop on board a nice breakout one way or the other, it can be one of the best trades. You catch the market in a vertical condition and kind of ride the train as long as you can. So I want to talk about what makes for an ideal kind of a breakout scenario, and also how you can avoid being kind of on the wrong side of things. So in the gold market here today, you can see we had a nice breakout toward the end of the morning Eastern time. And to talk about this idea of the ideal conditions, I like to think of it in terms of three things occurring. Okay, number one is that you want to have a clearly defined bigger picture bias, and that's something that we talk about bigger picture in our member report each night. But heading into the day today, the gold market was in a pretty clear down market, and in fact we had a very large gap from the holiday weekend into this morning. In fact, if you want to look at here's an overnight chart here, you can see that we had a really strong break lower on some really strong level 3 selling here in the overnight session, and we actually gapped down quite a bit. So whenever there's a gap opening, we want to see, is there going to be continuation or does that gap fill? And you can see the very first bar of the day, number one, we got below one of our key bigger picture levels at 1279, and our first bar of the day was this level 3 selling bar, showing that there was some selling in this market. So pretty strong indication that the down bias is still very much intact. Okay, so that's number one, that we have a very clear bigger picture bias. Okay, next thing we want to do, we want to see that the market can establish what we call a two-way, or a more of a consolidation, or kind of a two-way market, especially early in the session. And you can see here in the gold market here that we had this break lower on the level 3 selling bar. We had an attempted pushback by buyers that was rejected. Then we had more selling that came in, and then we finally had some buyers come in here that had some follow through. Now they couldn't take it above this resistance level. They couldn't take it above this shorter term red box resistance level or this bigger picture resistance level. That's actually kind of what we would call, just as a side note, kind of an ideal confluence trade, where you've got the bigger picture. Just a little side note: bigger picture bias is down. We're below a key bigger picture level. We've got some really good structure here with the level 3 selling bar. We've got this red resistance bar. We've got this deceleration. So a lot of things, 5 things are coming together at one spot. That's kind of an ideal trade location. But beyond that, the key point is that we had some selling come in, and then we had some buying come in. So we have this two-way market where we've got selling, now we've got some buying. Okay, so we've established that there's a two-way market. The software has actually defined a pretty good consolidation in here, and so now we have the first two conditions in order. We have a bigger picture bias that's down, a two-way market. So what we're looking for is a break of that range, which is here. We're looking for a break of that range, number one, in the direction of the bigger picture bias. So ideally, we would want to, for a pure breakout trade, we want the break to be down. Okay, if we broke out higher, you can certainly jump on board. You just know you'd have to be a little more nimble. You might want to wait for a pullback instead of just jumping in at the market. Okay, so hopefully that makes sense. So number one, we want it in the direction of the bigger picture bias, and number two, we want it with a level 3 or an extreme selling aggression bar in this case. Okay, so you don't want to just jump on board on pure price action when we make new lows. You want to see that there's some true selling aggression behind that to show that there's some real selling coming into that market, which you can see in real time. So when you have these things lining up, bigger picture bias, two-way range, we've got the bigger picture bias down, we've got this two-way range, now we've got a break lower with this level 3 extreme selling aggression bar. That's kind of the ideal breakout trade scenario. So you can see the bar closed right there. This is a 2-minute chart. You could certainly get on board quicker if you wanted. You just hop on board on this scenario. Does it mean it's going to work out every single time? No, not at all. But you've got a very high probability scenario here where, again, bigger picture bias is down. We've got a two-way market established. We break out in the direction of the level 3 bar, and it's done on this extreme aggression. So we've got everything kind of coming together there. And you could see, you know, this thing had a pretty nice ride for the gold market. Then we had some buying that came in to start to say, okay, we're turning more two-sided. That vertical train ride may be coming to more of an end. Okay, so hopefully that makes sense. And I think it's also important to note that, you know, we actually made a new, just to say how do you stay out of trouble, we actually made a slightly new low right there. Okay, what's the difference? The difference is that's a gray bar. There's no extreme selling coming in on the low of the day. You can avoid kind of that head fake. You can avoid being on the wrong side of things because you're only going to jump on a breakout trade if you see that there's really truly buying or selling that's coming into the market. And if you can also combine it with these other factors right here, you really give yourself a high edge trade. So hopefully that makes sense. If you have any questions about that, let us know, and we'll talk soon. Thanks.